this hour.
Okay, well, Vinay, Jaising is joining in. He's the MD and Co-Head Portfolio Management Services at GM Financial Services. Vinay, thank you so much for joining us on the show. Wanted to start by asking you about the big event upon us, which is the union budget. Of course, at the end of July, July 22nd is when we're expecting it. But from a market perspective, is there anything that this budget can do to further, spur the animal spirits? Or do you think we are well on track despite the event?
So I think the market is looking at a couple of things in the budget. First is the comment of how populist is the budget going to be. The government is, I would say, very lucky that RBI has given in about 2.2 trillion or about 1.3 trillion incremental money coming, which was not expected earlier. As against 800 billion, you've got that 1.3 trillion kitty coming in F25, which was not expected in Feb. So how are they going to use that? Are they going to use that by increasing the housing PMAY schemes? Are they going to use that by increasing capex in certain fields? Or are they going to use that by increasing subsidy under the fields? I think this is the first important question the budget has to give us. Second is reforms as usual. Are we expecting anything on the taxation front? People are wondering whether, you're going to increase the gamut of taxation, reduce taxes at some part. So I think these are the two big comments which people are looking forward from the budget. First is it business as usual? And second is, are you going to make it a lot more interesting by changing the tax structure, albeit, getting it lower as against getting it higher?
Hi, Vinay. Good afternoon. Good to see you. And Vinay, what about the Indian markets? We continue to chug along 50, 100 points on a day-to-day basis. Do you think we're getting ahead of ourselves? Or do you believe that we're in a sweet spot? Growth is coming about, inflation under control, and earnings as well are looking up. So we deserve to trade at these valuations.
So I come from the latter camp. Nigel, you said it better than I would, right? The word sweet spot, comes with the current account deficit. We'll start seeing analysts talking about the deficit going to a surplus in the next 3 to 4 years. We'll talk about the forex reserves go from 650, 660 billion dollars to even close to $1 trillion in the next 3 to 4 years. We'll talk about the earnings growth now being a lot more broad-based. Earlier it was only about financials. Now we'll start talking about the Make in India themes, the capex structures which the government has done, which will increase the overall growth of the country. Now that's the background for India. But when you start looking at the rest of the world, they're still waiting for the big word called pivot, right? They're still waiting for the interest rates for US to start cutting it down. You're already seeing so much of pain on credit card companies. You're seeing so much of pain on mortgages in US. So at one end, you're seeing the rest of the world reducing or slowing down their overall GDP estimates. And here you're seeing India doing well. You did have a hiccup of what happened on the election day when you saw the market correcting. All we want to see in the sweet spot is policies, reforms as usual. Let the companies do what they're going to do. The increasing free cash flows of the entire country is pretty amazing. And I think we are in a relative sweet spot. But yes, don't expect 2024 fiscal to be repeated in 2025, as far as the market's concerned.
Are there any spaces where you are a bit cautious now, Vinay?
We were grossly overweight in the capex sector. We were more than 3x overweight in the capex sector, capex including industrials, capex including cap goods space. I'm adding power equipment out there. The valuations in some of them, I'm adding defense out there as well. The valuations in some of them have gone and hit the roof. So, we're getting out from them and looking at relatively safer havens, be it in the pharmaceutical space or be it in the private bank space, which have become a lot more lucrative. Also, we're trying to see if in the budget, if there's one thing which the government may announce on the housing part, how do we capture that? So, we're kind of just shifting a little bit, but our three legs, which is FinSum, Make in India and capex, the themes there are a lot more similar, just some tactical changes.
Capex needs cement. You all have been bang on in a couple of smaller cement counters, and we had a large deal that was announced last week. Out of nowhere, Pennar 10 million ton unit getting sold had a good sum of money, 11,000 crores. Do you all continue to like some of these mid-cap undervalued stocks, or are you shifting now to the larger cap names because consolidation is going to drive pricing, and then the ones that have control on costing will actually do much better?
So again, Nigel, you've given the answer, right? So we continue to hold those companies which have less than $90 per ton as the weighted average price. We think now's a space where you can go closer to the larger cap names. Even companies like Grasim, where you've got, a bit of both. You've got a holding company discount and some paint business coming in. We're looking at that. Among the small caps, incrementally in terms of buying, we're keeping our eyes open, but we're thinking the prices are pretty much there, wherein it's going from a buy zone to a hold zone.
Okay. From a buy zone to a hold zone. Got it. Just one follow-up question on some of these consumption spaces like autos, right? We've had a fairly decent run here. Growth has been good, especially for some of the passenger vehicle names. Some of the two-wheeler names are coming back in a big way. But do you think that the cycle has peaked, or is there more to go?
So I think rural India spend, as that comes up, you will start looking at a lot more two-wheeler names, companies which will have one-off stories of theirs as well. Let's take the case of TVS. You will start seeing the margins which have already moved up, inch up further, 11, 12% going to 14, 15%. You'll see the EV story pan out there as well. So I think some two-wheeler names are pretty appealing. On the passenger names, I again think there are too many things going their way. Case in point, we've always liked Tata Motors. We still like it. The stock's done well. The deleveraging part of the story is playing out very well. Now they're talking about breaking the company up into two and listing that. That will be another big fillip on for the company. And again, the EV angle would help Tata Motors as well. So we are pretty, we like the auto story, and we are pretty much invested in them.
Okay, all right. Vinay, one theme that you all caught early was the defense pack. And I think HAL was one stock that you all got in early. I recall last month I asked you, I said, what's the view on HAL? And you're like, okay, you all prefer HAL in comparison to BEL, if I remember that correctly. In the last 1 month, the stock is up close to 10%. What do you do from here? Hold on to the stock, or do you think from a buy it comes now down to a hold because the stock has as it is run up so so steeply?
So, Nigel, this is a question we are asking ourselves virtually every hour because, it's not up 10, it's up more than 10%. And, there was a time we bought HAL, which was at 1 year for...
Vinay, yes. It's up 10% from the last time we chatted, 11% to be precise, from last month till now.
Yeah, exactly, right? So that's too much, so thanks, Nigel. So it's up like crazy. And that is obviously a concern for us. Having said that, we're very confident if there's one stock we want to keep on holding on to in the defense part, it is Hindustan Aeronautics, because we think at the end of the day, it has too many moats, moat being technical, the airline space is very difficult to replicate. Second is the maintenance part of it, which today it only has India as its business, through Tejas, but it'll start getting global orders also coming in. Come 2 years forward, you're seeing the earnings drivers also increase. So we like Hindustan Aeronautics. We're waiting for a correction to get in more. Currently, we are moved from the buy mode. I would say we are between the buy and the hold mode for the stock. We really like this name, but we're thinking of it like as an FMCG name, which will keep on giving you at least 10 to 15% returns, not in a month. I'm smiling, not in a month, but at least over, compounding over the next couple of years. It's just doing too well, We don't want to break the mode from our side.
Well, Vinay, just one final question from my end, right? Is there anything to suggest that this rally, this market rally that we've seen up until now could come to a halt? I mean, any risks on the horizon according to you?
So if you see the FII inflows and you compare that with the rest, the domestic inflows, the domestic inflows have been close to $12 billion in the last, give or take change, 2 months. And the FIIs have had an outflow of about $4 billion. So this number is, you add the two, it's yet a plus $8 billion. Clearly, promoters and the rest, have been selling. So the first thing which comes to your mind is investors may start wondering, why is the management of the promoters selling? I don't think that's bad. It's, at every level, everyone needs to make money. But I think what's interesting, and, to put your story the other way around, what's going to happen?
Oops, I think this...
If I start putting in money as they uttered in the last 2-3 days. So, today the FI ownership is I think sub 16% for India. that number can go to 20. On a 4% growth on a $5.2 trillion market cap country is as much as $200 to $220 billion. So you break that up by 4. I won't be surprised if FIIs double, their investments in the country to as much as $50 billion. So I think that's a positive trigger, which is why, Nigel's first question, I think the market's in a sweet spot. Apart from, global pains, things look pretty good.
Yeah, it's like the biggest party animal who, 10 years ago has not been part of this party, because actually they've been selling, and the holding right now of FIs in the Indian markets, I think is 16.5% odd, which is a multi-year low. All right, Vinay, we appreciate you joining in, taking us through your take on the markets as well as a couple of stocks and sectors that we discussed. Well, Surabhi